Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So today we have Chris Karageuzian on with us from helpwithmyloan.com, which is a very interesting platform, one that I just found out about from Chris, and I want to know much more information about it. So Chris, if you wouldn't mind kind of going through a little history of how you got to this particular platform and where we go from here.
Absolutely. And thank you again, Bruce, for having me on. Yeah, so I started my career at Coldwell Banker, and then I moved up from there while I was at Cal State Northridge getting my bachelor's in finance and real estate. I did business banking at real estate, managed teams of about 20 plus people there. Then worked on my way to JP Morgan on the private client side and commercial real estate division. And then went over to US Bank in their commercial division, met my co-founder there. And then in 2017, we launched Help with My Loan. And basically, it is a platform that uses AI optical character recognition technology to underwrite personal financial statement tax returns for over 300 plus lenders guidelines in commercial real estate lending, residential lending, business lending, and personal lending. We have an industry-leading 97% match rate while originating over $800 million in lending for businesses, consumers, and brokers all across the US.
So I'm just very fascinated by this idea of optical recognition. Tell me how that works. Does that actually help you qualify somebody for a loan?
Absolutely. So, as great as people are and humans are and Excel sheets are, the AI uses optical character recognition technology that can read millions of lines of code. And what we did is, again, not giving too much of our secret sauce, it basically is able to read personal financial statements, tax returns, within seconds. So it can underwrite full set of tax returns within 15, 30 seconds, and then it spreads them out to our encrypted guidelines we have from these banks in our database. So it moves it at a 99.9% accuracy. We test its text track every month, and that's how accurate it is and how fast it can move by using that kind of technology, much faster than we can do it ourselves.
Wow, that is quite an incredible technology. I assume you didn't start out with that initially.
No, this is our 2.0 version. In 2017, 2018, we had a more limited database and we didn't have that AI OCR technology just yet. We had envisioned it. And then as technology came out, and my CTO is also my great friend of 24 plus years, once we saw the technology was there around 2019 is when we started to develop, and we rolled it out right around at the end of 2022, this new version that is now in our company's product line.
And it sounds like that expedited the process just incredibly
Oh, yeah.
from what it was.
Yeah, it's cutting the process down about 80% time. So, for me, I love doing sales. I love going to network events. What I didn't like is collecting those dense packages and then using Excel sheets, spreadsheets to really spread them out. Sometimes it would, depending on how complex pass-through entities are, some files would take me minimum 2 to 4 weeks to underwrite. And sometimes to underwrite to say a no, right? It's all that time that you spend sometimes, these lending guidelines you have don't always meet those deals that you have. So it's also the time we're saving is cutting a deal to say yes fast or a no fast. So, and again, 97% of the time, though, we are saying yes.
Wow. So I assume each bank sort of has their own sort of system and own kind of criteria for approving loans. So that how much do you have to customize your system to make it work for each bank?
Yeah, that's what we did. And it's a great question because we created like a canvas basically. So every time we onboard a new lender, we have this beautiful canvas system that we put in any of their guidelines, any of their products. They want to start with one product, 25 products. Our AI's database can handle it. We put in every single guideline they want, their niche, restrictions, cash flow, DSCR coverage, whatever they want us to do. We customize it pretty seamlessly.
Yeah, so you actually cover the full gamut of loans. Give us a little fill in on that.
Yeah, so what we are heavy on is 45% of our production comes from commercial real estate, both conventional, SBA, private money, hard money, stated programs. we've done everything from multifamily office buildings, mixed use, to gas stations, hotels. Construction, of course, is huge as well. And then another 30% is in our business lending criteria, from startup funding that we've done, SBA 7A, 504 loans, to residential, obviously primary, but also, correspondent lenders that can do creative lending for business owners, entrepreneurs, different rate programs that we can even do for, not only primary, but, second homes, investment properties, your third or fourth properties that sometimes traditional banks can do it. And we have different lenders that can meet that. And we do have also personal lenders that are online lenders only, and you're able to find terms that you're not going to find traditionally at these traditional firms that you find and hear all the time.
Wow, I'm sort of stunned that you're actually able to do this in SBA loans. That's very complicated and requires a lot of information, right?
Absolutely. And then that's the part where when we onboard a lender and if they want SBA, right, they just simply tell us these are the guidelines. We get their spreads. We teach everything into our database. And then the AI is reading those same set of tax returns. So what the fundamental same thing that happens is no matter what, it's going to be the same set of tax returns, right? Your 1040, 1120, 1120S, W-2s, your personal financial statement, P&Ls, the net operating income cash flow. Those formulas are what we get, and then the tax returns are pretty much updated every year. And then we teach our AI's OCR technology where it needs to go to identify the right set of tax returns, the right cash flow. And then if it's for any reason you drop in the wrong file or the wrong year, the AI tells you, hey, this is the wrong file, this is the wrong year. So even someone brand new, I'm talking about, like, I've never done, let's say, a commercial real estate deal in my life. You use our platform, this AI dummy proofs it for you in essence. So it's like
Wow.
lending for dummies almost. So
Well, so how long does it take you to onboard a new lender?
it depends on what they want, right? If they simply just want to be in our database for a couple of products, each product on average takes us about 5 minutes to onboard.
Whoa.
So it,
Wow.
it all depends how many products they want, how many users do they want, right? Because besides just being in our database, they are given an access to the actual underwriting platform to use for their bankers and salespeople and their underwriting, as well as their admin and executives that has an overview dashboard to watch, pipeline reports, activities, lead tracking, because we also have a leads marketplace available in our platform. So it does all these great things that, sometimes are hard to track. You got to depend on people to create pipeline reports or they're inaccurate. So we really help a lot of those tedious things that can be automated, streamlined, because I've come from that industry. I've managed teams of 50, 55 people, and it's not always easy to get 55 people to create a report or, give me information that fast. So, and even simply transferring a file, people call out, people get sick, emergencies happen, vacations. We have a transfer feature that you can transfer files, leads seamlessly to anybody on your team with the spreads, the documents on there. The AI will actually even compress it into a zip folder, organize it, put it into any storage you want, whether it's Dropbox, Box.com, your desktop, and transfer it to anybody on your team, because things happen. And that's
Right.
something I even thought of to make sure we create, because I've had that happen in my 20 plus years at the banks and, managing 50 people.
Oh yeah. No, that's got to be incredibly difficult. So it sounds like you sort of have provided a CRM for lending, basically.
Yeah, we have a CRM. It's not as robust as other CRMs. It is in our vision to expand on that. But yeah, you do get CRM. You get a history of your client. So when they come back, you see that you've done previous loans before. We have a first come, first serve leads marketplace that we create our own leads from our helpwithmyloan.com website and funnel that right into the leads marketplace. Because we don't want to spam our leads also. That's what a differentiator of why our leads are such high quality compared to other platforms out there that sell it to 50 organizations or more. It's a first come, first serve for us. So if you buy a lead from our platform, it's exclusively yours and your lifetime customer as well. And again, you get to see, does it match my lender's guidelines, right? Why buy a lead that you can't close, right? So that's another thing we've done is when you see what kind of loan it is, you're gonna be like, it'll tell you this matches your bank as well. So that's another caveat to buying a lead is like, well, this is a slam dunk. Not only is it underwritten, it's my type of lead, and it's going to be only mine. It's not being sold to any other user. So we've really created a lot of these things to really own even leads on top of the platform of closing your deals much faster.
So did the lender actually ever, well, is there a case where the lender never actually uh, physically talks to the buyer of the loan?
Oh, of course there is. Because again, KYC, know your customer. It's a huge regulation in banking and lending, so
Mm.
they got to do their parameters as well. We do our part, of course, of verifying the lead, making sure it's quality, it's real. We have all the technology to make sure it's not a bot or spam or junk. And then after that, yeah, the lender does their KYC part, of course.
Yeah, they have to come back and do their own due diligence and so forth. But it sounds like you, as you say, yeah, a lot of these online lenders or online brokerage companies basically just sell the lead, and then the bank basically has to call and close the deal.
Yeah, you might say, oh, it's a great scenario, but at the same time, one, competition. 50 other people are calling that same lead. The frustration of that client might already be like, well, I didn't sign up for this many calls, right?
Right.
Then again, does it fit your bank? The scenario may fit, but we took it a step further, is like we underwrite the deal for you if you really want to buy leads like that, even where it's like it's on a silver platter. So I think those are two key components that we really make ourselves have a competitive advantage to even the lead marketplace right now.
Do you actually do any lending directly?
We do not yet. It is something in our scope that I can
Thinking of,
talk about. Yeah, we have that. Our systems are in place for it. We've spoken to different people of creating our own fund, and you know, I know when we were talking about it, we are getting acquired, so that is probably a long-term vision goal that our new um, team that's acquiring us would probably want to talk about as well.
yeah. So it just kind of depends on what happens in the near future with this new
Absolutely.
team. So how many people do you actually have on board now as employees?
Yeah, currently we're a small, lean, heavy team of only about 10 people.
Oh, wow. That's fantastic. But
Yeah.
you're looking to kind of expand and maybe do some work in the Chicago area and hire some people in that area?
Yeah, absolutely. I think that is one of the biggest mission statements that really got me excited about, on top of everything else these new investors and buyers are bringing with, they bring a team of age group between 18 to 26-year-olds right now in Chicago that the unemployment rate is over 49%. And
Whoa.
hungry, they're motivated, young youth, they're educated as well. Some you may just have a high school diploma, which is fine, or some even don't because of the scenario. But they're hungry, motivated kids, and it's like, what better way for us to help our youth, get them to do great things, lend in their community, lend across the U.S., and at the same time, me and my co-founder Jack Artinian, he also has 20 plus years to really help teach them everything that we've learned in these 20 years. It's going to be a great, exciting times for us in 2025.
So is Jack your CTO? Is he your
Uh,
tech guy?
yeah, Jack Artinian is my co-founder. I met him at US Bank, and then he's our COO.
A COO. Okay. And then you've got a whole tech side within that 10 people that are
Yeah.
working on coding and so forth.
Yep.
So it sounds like AI has just completely revolutionized the lending side, or that it will continue to revolutionize the lending side.
Absolutely. I mean, it's inevitable, right? If we want to get lean and we want to also lend, and then during uncertain economic times, we really want to lower risk, what better way than a system that 24/7 can work, monitor your portfolio, risk management, right? Instead of depending on these legacy ways of spreadsheets, Excel formulas, and things like that.
Yeah.
It's yeah, it's just, and human error. I mean, it happens. People miss a decimal point or they forget to add a rule that is part of their guidelines. And it's happened where unfortunately I've been in banks when they've given an approval and there was a major mistakes and all of a sudden we have to rescind that. And you're talking about
Oh,
problems or vice versa. They're declining the deal, but they forgot to add this back, right? Or they did that. So, it's really, change is great. It's improvement. Yes, it can create some friction in that process and fear, but at the same time, you're really doing the number one most priority, in my opinion, which is helping the consumer out there get lending, do it fast, do it efficient, and do it ethically, right? And I think sometimes there has been, unfortunately, banks that have done based on the community or ethnicity, they've steered away from lending. AI doesn't do that. AI does not see that. You see just simply the numbers. Does it make sense? Great. And then you put some human eyes on it if needed. And I think that's another thing where I've really have a drive as being a minority and someone that has seen banks do some things and they have been fined for it. And I think that's one driver also that our new buyers love is, helping, you know, disadvantaged communities and minorities also get a better fair shot at lending.
So are you working at all on the private lending side, the hard money side? Do you
Yeah.
have lenders in that area?
Yeah, absolutely. We can cover from A paper to D paper lending. We don't really dabble in that merchant cash advance or daily cash advance. I think that's such predatory lending and it's very high risk. But we have stayed in private money, hard money options because, sometimes things happen and they want to get a money fast and deal fast and it makes sense. And we do dabble in that as well too, and have done great things for lenders. And once the deal is done and the credit, let's say, is better, or they just need the money fast, we help them find a conventional option too, or refinance out of it pretty quickly. So again, going back to doing things based on their risk adversity, but also doing it ethically. I think those are huge things for our company, always and forever.
So are you in the fix and flip world at all? Does that come into your,
It does. Yeah,
yeah. So
absolutely.
that's definitely happening. I'm just curious, do you have a situation sometimes where you do 100% loan?
Not lately. I think maybe a few years ago, yes. We had great options. I think, it depends on the deal right now, but it's very, very tough right now to get 100% financing on a fix and flip.
Well, and as you said earlier, the rates are actually for some banks going up right now instead of down.
Yeah, because right, even though the Feds did their cut, that doesn't directly always affect certain lending because if it's tied to the Treasury, if it's tied to the S&P, and different stress rates that they have internally, doesn't always quickly happen. And I think the fact that it's a great trend, I think we'll see definitely more cuts by the end of the year, and then we'll see how the market reacts with those. But right now, I think rates are kind of staying steadfast at what they were, or they've went up a little bit. The positive though, compared to a year and a half, 2 years ago, they are cheaper than what they are. Like the 30-year fixed at one point in 2022 was around mid eights. Now you're talking about 6.5. So maybe a month or two ago it was like mid 5.99, 5.8. It's gone up, but you look at what you have done a couple of years ago, you're still in a great position because refinance still is up 111% right now. So that's another factor that you got to look at is, at the end of the day, if you bought in the last year or two, it makes sense still to refinance, even with what's happened this past month. You're still going to save about 2%, 1.5% in your rate.
Oh, that's interesting. Wow. So refinance has really become popular lately.
Oh yeah, absolutely. Especially, if you bought in 2022, 2023, your rate's probably somewhere between the 7 and 8%. Even
Yeah.
if you have great FICO, it's not hard money lending.
Yeah.
You're maybe wanting to get out of hard money lending anyway, right? Because you repaired maybe your FICO or your LTV is so great because values haven't really dropped depending on your location as well. I know Pasadena, I haven't seen prices drop one bit.
Yeah. Yeah. No, that's a very tough market. So it sounds like you're very much on the positive side of what AI can do for this world.
Yeah, absolutely. I think we've had so many successes where brokers, consumers have come, hey, my deal for 3, 6 months has been declined, countered, I can't find a home. We run it through our system, within a couple of minutes, and we tell them, hey, here's the bank that can do it. They do the matching, and then we close it sometimes. And depending on the structure of the deal, 30 days, 60 days, 90 days, and we earn a customer for life, and we help them get their financial goals. It's like the reason why we have our motto. Our goal is to help you reach yours, and we really prove that with AI technology. And there's a lot more that we're still working on for 2025 to really roll out, and excited about it.
So I'm curious, have you seen any downside to AI in your business?
The downside, I mean, you got to make sure, obviously with all technology, the first 6 months we had a lot of bugs, we had a lot of glitches. I mean, that comes with the territory. And, our CTO was ready for that. Our tech team was ready for it. So we made sure once we saw those, we fixed it. And then I would say we've been on cruise control for the last yeah, 2 years, like 2025. So we launched in early like 2022. So the first 6 months, just that, but it's not like it did anything where the deal went sour, right? It just sometimes slower processing time to underwrite the deal, or it couldn't read the financials well. And what we also did different compared to any technology out there, most software companies similar to us uses 15 to 28 third-party integrations. We're only using about 8. So that helps our systems really be, lean, less bugs, and then less crashes. Because when you depend on 15 to 28 third parties, well, if they have issues, guess what? Your software is going to have issues. So that's something our CTO was very adamant about. Hey, let's take some more time and build this way. And it may be costing us more money, but in the long run, we're going to be a better player out there and dependent on less systems. And our goal eventually is to even lessen the 8 integrations we have right now. As more funding is coming our way and a bigger team, we'll probably even shrink that third-party integration from 8, hopefully down to maybe 5 in the next couple months.
Wow. So do you end up running credit checks?
We don't. It is something we've spoken to, the major creditors out there that we can integrate. They've talked to us how we can do it. Right now, we let you put your FICO. For the most part, everyone knows their FICO because there's so many free different, systems out there for you to monitor your FICO. But definitely, yeah, long run, we'd love to do it. Lenders, if they want it eventually, we can integrate it. And we've already spoken to the major bureaus that integrating and how we would do it. Pretty seamless for us to do it. It's just the time and budget is kind of going to be our key differentials to do that.
Yeah, you got to prioritize where the right place to go is.
Exactly.
So yeah, so in this case, the bank typically will follow up on the credit side once they get down the road with a particular buyer at some point.
Exactly. So when you pick the drop down of your FICO on our systems, those ranges that we have are typically the ranges most bureaus or places have you at, and then the lenders have those sectioned off, right? If you're between 750 and 800, not going to make a major difference. 700, 750, 680 to 7, those where it's in within the range for them to be comfortable with the deal and score it on the front end based on that. And then they'll pull the hard credit once the customer is ready to move forward.
So what happens when you have a lower credit score person come in?
Yeah, and our AI basically starts removing lenders out. So every
Uh,
single criteria you're putting in there, it removes lenders out. So by the time you're getting to your final phase of, where it tells you, hey, here are the lenders from our 300 lenders in our database, if it's 22 lenders match, it's based on all the, pinpoints of data you're putting in for your scenario on top of the financials being underwritten. So when you're building your scenario, our AI from that moment is already removing certain lenders that can't do the deal. We even have lenders that will be okay with a bankruptcy if you've had it in the last 2 years. Not every lender is okay with that. No matter how strong of a deal, no matter how many millions you might bring over, their credit guideline is a hard no on a BK, right? So
mm.
if you were to answer that question, yes, it automatically removes those lenders.
Oh, that's interesting. So explain this to me. So
Absolutely.
okay, you put in your application, then you come back with a certain group of lenders. Then does the buyer get to choose kind of which lender they want to go after?
We put the power into the decision maker, into the customer, into the broker using it. We have an automatic filter that shows you the lowest interest rate, so
Ah,
it's that way. You can always change that. We have a really cool tool also called the eye feature, where if you hover over that, besides seeing on your loan card the term, rate, prepayment penalty if there is one, terms, etc., there's an eye feature that we help our lenders also market some products that maybe they don't have the marketing budget to do commercials because they're so hindered with so many other budgets for regulation and fines and different things. They'll highlight certain relationship discounts or promos that they have. Hey, we have a 1.99 special, etc. We have relationship pricing. So it helps them also be competitive because maybe they can't beat in rate, but they'll beat you in giving discounts on the appraisal, on third party, on escrow, a promo that, is a 1.99 for the first 5 years of the term. So we also have that feature that we built out. And the great thing about it is it's because we take feedback from our users. One of our lenders suggested that, and it was only 5 hours of coding. We got it done like that. And it was just great. We were like, yeah, that is a cool feature. And then we rolled it out to every lender because we said, hey, why not? So every lender also gives us promos and we update it on the loan card, which goes from our backend database.
Well, that's cool. So actually, that was sort of my next question. I mean, lowest rate
On
doesn't
the same field right here, man. I'm reading your mind.
exactly. Yeah, yeah. So the lowest interest rate may not be the best deal for that particular buyer. So is there a way that they kind of know, okay, well, there's a lot of points involved with this lower rate, or
Exactly.
how do I know whether I'm getting the best deal here?
Yeah, on the loan card, it does explain third-party fees. So that's another thing you can start comparing, which is a great question. Is like, yeah, the rate is great, but wow, it's $10,000 in closing fees. Then you see,
Right.
okay, well, this lender is about, quarter of a point more, no closing fees, right? And a promo in there, or a relationship pricing if you bring in $100,000 relationship or what have you, right? And then they see that, there's also business lines of credit because, sometimes you're owner occupied deal buying this building. It's great to know that this bank also does business lending, right? They're not just a commercial lender and they don't have equipment lending, business lending. And those are things we highlight in there too, where maybe at the same time, they want to do the commercial loan with this more expensive bank because they're also going to get a business line of credit, an equipment loan, and the capital to buy that building. That changes the deal also because sometimes people are willing to pay more to get the three other categories I just mentioned.
So, so okay, I'm going to ask you. So, do the do the buyers sometimes get confused? Like, oh, geez, this is too confusing. I don't know which one to pick.
It happens, right? Especially if it's your first time maybe doing commercial real estate or maybe you're a broker. We do offer full white glove support depending on the package that you've chosen to sign up with us. So again, with myself, Jack, we have different other members on the sales team. Yeah, we absolutely help them in case there is confusion. We have a messaging service right on the system so you can get answers immediately. You can phone call us. We have our customer service rep is right here in the US. You can also email us. So we make it very easy for you to ask us questions and get support.
Oh, that's fantastic. So, it sounds like people don't get terribly confused in this process. I mean, lending in itself can be very confusing.
Yeah, we also because we're consumers, right? I've done loans for myself. Jack has, of course, and then other members, and again, our CTO also has a company called Durango that has done thousands of software and websites. So he has the consumer's mind always at hand. We've done surveys of what they consumers like and don't like in the industry. They give us feedback of what they don't like also of our platform, and we always are looking to improve, and we do. So we made sure we made this, easy to understand. The interface is easy to read, and it's not confusing. And for any reason, if it is great, that's why, we have customer support and, it's not just, you're on your own. We don't believe in that, and I guess sometimes a little hand holding is needed in the beginning. And then after that, they're off, closing deals left and right and just happy that they're our customers.
That's fantastic. So what happens? Do they pay you a monthly fee up front? How does this work?
Yeah, we have quite a few models. Our most popular one is the transactional model because you don't pay anything. It's you do a deal, we take a percentage of the fees that are charged or rebates or commissions paid out because there's two types of lenders. A, they give you a rebate and commission on the deal,
Hmm.
or B, they don't, and you got to charge your client. And then we just collect a certain percentage off that. And then again, it all depends, right? Certain lenders that don't give rebates and commissions because they want to be more aggressive in rate and term.
Hmm.
Some lenders aren't as aggressive in rate and term, but because they're going to pay you a commission. But then again, caveat, they might have some other relationship things that make sense for you to do it. So that's how we do it. If not, we also offer a subscription model. We have three different pricings that start as low as $99 per user per month.
So basically, most of the time you get paid at close of escrow.
Exactly. We don't collect until you close your deal, and then
Yeah.
we get
So
issued
if
payment, and then
somebody's sort of just testing the waters, they can pay the 99 a month and go that way.
yeah, where hey, they run in their own deals, they get support from us, but we're not going to be doing the transaction per se. Transactional is like we do the transaction internally, and then we pay you your referral fee as soon as the deal is closed, and we have been paid.
Yeah. So it sounds like a fairly low percentage do the monthly approach.
Yeah, right now about 95% of our base is about transactional model, and then 5% go on a subscription model.
Yeah, that's very cool. All right. Well, Chris, where would people get a hold of you?
Yeah, absolutely. The best way would always be submitting your request. If it's a loan scenario, on helpwithmyloan.com. We also have a contact us page as well. You can submit it. And then my email is always available, chris@helpwithmyloan.com. I would say those are the three best ways to reach us and our sales team.
That's a fantastic conversation. I look forward to hearing about how your close goes with your investors.
Thank you. Us too are very excited about the future and what we're going to do for, the US lending world, the economic world also in Chicago. And this was a joy, and thank you for having me on, Bruce. Great questions, and really enjoyed it. Thank you.
This was very fun. So I look forward to talking to you in 3 to 6 months again and see how things are going.
I'll be there.
All
Looking
right. Talk to you soon.
Take
Hold
care.
on.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.